Welcome back, guys. Welcome back to the channel. At the initial stage of my life, I wasn't actually into trading at all. Before I got into trading, before I got into doing this forex and stock stuff, I wasn't actually into trading. At the initial stage of my life, I was into computing, and I had a computing background. I didn't have a finance background. I knew nothing about finance, so I had a computing background. I took all my education through computing. Um, through college, and all my education was through computing because I loved computers from the beginning. I realized that computers can do wonderful things, so I just fell in love with computers from the beginning of my life as a young child or growing up. So I wasn't actually into forex, I wasn't into trading, I knew nothing about trading. After my education, I took a job as an instructor, a computing instructor, and later took a job as a systems admin and network admin, and I became a network engineer over some time. This is a long story. I shared this story in one of my videos earlier in the channel, so you can check it. But the whole thing is that I was into forex, I was into computing. Then one day at work, one guy introduced me to forex. I saw him trading. Actually, he was trading this kind of indices, synthetic indices. That was actually how I actually got introduced into forex trading or day trading. So he was trading and I saw it on his phone, and I said, "Guy, what is this?" And he said, "This trading, you trade, you make money, blah 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 blah." So I decided to also got into it. I decided to do more research on it, and I fell in love with forex since it's also related to computing. You see, you have to trade on computer, so I was actually happy about that. Then he introduced me. I signed up an account with a broker, and I decided to practice with demo account, and I began trading. And as every beginner does, when you begin trading, you think that actually trading is very simple and you just click buy and sell. I knew nothing about the knowledge behind trading. I knew nothing about the technicals. I just thought you just have to click buy, you click sell, and then you begin trading. So I actually quit my job quickly because I made some profit when I began trading with raw account. I made some profit, as every beginner will go through. I made some profit. Every beginner has some beginner luck, right? Why you don't even know what you're doing, you still click, and by chance you make some profit. So when I made profit, I said, "Oh, guys, look at within this short period, I'll be able to make this small profit out of this capital I invest, and then why don't I take my job and just focus on forex?" So yeah, I quit my job. I don't know what I was doing. Actually, what happened is that when I made some profit, later I was actually losing it back to the market, and I thought I need to give more attention to it. That's why I'm losing. So I decided to, with long story short, I tried to quit my job and start trading. And unfortunately, when I quit my job and I started trading, I never made profit. I never made profit within those periods. Over a period of, I spent my field for a period of almost 8 months to 1 year, still not making profit. Like serious, still not making profits, because I was making profits when I was not even serious about it. Now I decided to become serious about it, and I was not making any profit at all. So I was surprised why I was not making profits, and actually it was a very painful experience. That today it looks very fun for me, but it was a painful experience back then. And I realized I have to sit down, because if I don't sit down, then I can't go back to work. So I've quit my job. I decided to trade. I want to learn how to trade. I've told my friends, "Hey guys, I'm going to become a billionaire. I found this forex thing, this trading thing. I'm happy about. I just want to trade and become a billionaire." And now I'm not making profit. So am I going back to work? Am I going back to search for job? Am I like? It was a very painful experience back then. So what happened is that after some time, after a period of 1 year where I was not making profit, I have to sit down. I said, "No, I have to sit down and learn this thing properly. I have to go through the proper education to learn whatever I need to do. Whatever I need to do as a day trader or as a trader, I must learn it." That's what I told myself. That's the decision I took. That really turned everything around. Because at first I was just trading like any normal guy who gets into trading, who just want to click buy and click sell, and thinking that when you click buy and click sell, you can make some profit out of the market easily, and it's easy money. Guys, it's not easy money. So I decided to sit down and I told myself I'm going to focus on anything I need to learn. Whatever I need to know as a day trader, I must know it, so that I don't leave anything inside. I don't leave anything behind, so that it's going to worry me, it's going to harm me in the near future. I need to learn everything I need to know. That's when everything changed. So I decided to read books. I decided to do more research. Instead of trading, I decided to pause trading. So I paused trading for a period of almost 3 months. All what I was doing was learning, practicing, learning, practicing, learning, practicing, learning, practicing, until through the process I was able to discover a strategy that I was able to trade with and transform my trading journey to become profitable. And that's what I'm going to share with you today. The strategy that through the process I was able to come up with, that I traded, that turned my trading around from the initial stage. So if you're here, then welcome, and pay attention to whatever I'm going to tell you, okay? And it's going to help to change your life. Okay, so the strategy is called initial balance. When we say initial balance, it's a concept I've talked about on this channel, but it's a general concept on which several strategies can be developed on. It was through the same strategy I was able to develop the initial balance with the Fibonacci arc and Fibonacci extension tools. But initially, that was not the strategy I was trading. From the initial stage of my career, I was trading the initial balance breakout. What does the initial balance breakout means? And I'm going to show you on the chart very soon. Let me explain the concept to you. When they say initial balance, it is the first 1 hour of trading activities of every chart. Either you're trading forex, either you're trading stocks, either you're trading indices, either you're trading metals. The first 1 hour of trading chart when the market opens, the first 1 hour range. So the initial balance determines how the market is going to behave within the day. There are actually 6 types of day trading activities, day trading charts, or day trading days you're going to see that I'm going to show you in the different video. But today, let me just explain to you. The initial balance can determine what the market may do within the day. So let's say the market opens. So the first 1 hour range, if the first 1 hour range is narrow, it means that day the market is likely to trend. Or if the first 1 hour is wider, it means that day the market is likely to range. So as traders, our focus is going to be on the narrow initial balance. We are going to trade the narrow initial balance breakout. And this strategy can be traded on almost every asset class, but mostly it works on US 30 because it doesn't really move faster. It also works on forex. So I'm going to use US 30 to explain to you and how you should trade this strategy. Please, it's simple, but don't take its simplicity and think you're going to make millions of money with it. Learn this concept first before you apply it on the market. So let's go to the charts and let me explain it to you. Okay, so the concept of initial balance says that within the first 1 hour of trading activity, the range you are going to see. So for instance, today actually is early in the morning. So if I were to trade today is 9th of May. You could see 9th of May chart. This is today's chart. This is yesterday's charts, and this was the previous day's chart. So let's see just from today, as I'm talking today, if you were to trade this strategy, you are going to count the first 12 candlesticks on the 5-minute chart, and you can see this is US 30. So you just go to trading view. If you don't have trading view, you can also trade it on MT5. So this is US 30, and we are on 5 minutes time frame. This strategy mostly works on 5 minutes time frame because one gets the first 1 hour of trading activity. So you begin by counting the first 12 candles of the 5 minute chart of every forex chart or every stock chart or every asset class you're going to trade. So let's count from this one. So starting from these separators, and mostly you don't see these separators automatically on trading view, but in MT5 you'll be able to find it there, but trading view you have to find this indicator. So I search for period separators. Can you see period separated dotted? So search for dotted period separators, and you'll be able to put it there so that it separates the periods for you. If not, you won't see where the market begins and you won't see where the market ends. Okay, so let's begin. Let's continue. So you count the first 12 candles of the chart. So let's start counting. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12 up to here. So we take our rectangle tool, rectangle tool, and we draw our box around our initial balance. So which means that this is our initial balance and this is a normal average initial balance. Initial balance can either be wider or it can be narrow. We are looking for either narrow or medium. We don't want the wider one, because the wider ones mean that the market is going to range. So today is a normal initial balance. So what we do is that now, after we mark our initial balance, we are now going to wait for the market to break out of the initial balance, and now we take our trade. So let's leave this one and go and mark another initial balance to see if you can get the concept. So the previous day, let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this is our initial balance for the day. Can you see? Let's count the other ones too. Let's go back again and count the initial balance again. Are you following, guys? So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. You could see that this initial balance looks wider. And if it looks wider, what does it mean? It means the market is likely to range. So you could see that day the market was ranging. Let's go back to our first chart. If you were to trade the initial balance strategy today, where would we have entered? So after the initial balance, you wait for the market to break out of the initial balance, and this was a candle that broke the initial balance. So if you want to take your trade today, as I'm talking right now, then you go for your position. So if you want to buy, you're going to put your stop loss. Always set your stop loss first. Stop loss should be at a very good place, and maybe almost half of the initial balance. If it's a little medium, if it's smaller, you can take your stop loss all the way behind. If it's a little medium, you can take like half, and you take risk reward of 1:2, 1:2 risk reward ratio, and then you are done. So if you have to trade this strategy today, this is where you would have entered after this candle broke out, and you would have still been in the trade. That's it. You would have still been in the trade. Okay, let's move on. If you had traded strategy yesterday, which was the day before today, then you would have taken your trade when the market broke, but you could see that this candle is too huge. Though the market did not return back so that you can take your trade, but it could have been a winning trade, because you could see that from this side, your stop loss could have been here, and take profit target twice as a stop loss. So this is where you would have taken your profit target. Can you see? That is as simple as that. Let's go to the previous day. The previous day we would have traded because it was a wider initial balance. If the initial balance is wider, it tells you that the market is going to range. Some initial balance can be very wide and sometimes can be average wide. If it's average wide or very wide, we don't trade it. If it's narrow or a little medium, then we trade it. So if the initial balance is wide, it tells you that the market is actually going to range for the day. You see, you must be able to predict what the market is likely to do within the day to become a successful trader, because if you can't tell what the market is likely to do, then which strategies are you going to apply? So you must be able to at least determine or predict, okay, the market is likely to do this because of this concept. This is why you must learn several concepts as a trader, so that when you are trading, you know what is likely to happen in the market. So today, this day, you would have traded this day. But let's see the previous day. So we are back testing back. We are going back to see that how many times this strategy would have worked and how many times it wouldn't have worked. So let's see. This was the day before, which was Tuesday, 6th May. So let's count our initial balance. Let's count 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. So this range is our initial balance range. Where is the breakout? You could see that the market broke out with this candle. So you could see this candle was the breakout, right? So where would we take our trade when the market pulled back a little? So let's go for a short position. So we'd have taken a short position here. Stop loss, this is a narrow initial balance, so stop loss should be behind the initial balance. So stop loss behind initial balance. Take profit target twice as a stop loss. Watch here, as I'm dragging here, this one is determining the risk reward ratio. So watch this side, you can see that it's changing. So 1:2 risk reward. That's it. It would have also been a winning trade. So how many times would we have won? How many times would we have win? Let me pull up a spreadsheet. Let me pull up Excel to record all our entry to see how many times this strategy would have win, how many times this strategy would have lost. Every strategy has can never be 100%. Every strategy has limitations, but this strategy has almost about 60 to 70% if you're able to trade it. The downside of this strategy is that you have to wake up every dawn. Like in my local time, I have to wake up every dawn to trade it, which is like 12 midnight. That's why when I began to become more profitable and I had other strategies, I decided to actually drop the strategy because you have to wake up every single night to trade it. And sometimes I get tired. I can't wake up at 12 a.m. sometimes. So that's why I trade other strategies. But this strategy actually works most of the time. So let's see. Now the spreadsheet is ready. So far, how many have we taken so far? If we are to begin from the end, let me start from the beginning. So we are backtesting for this whole month or last month. Okay. So let's see if first trade would have this trade is not actually completed, so we can't tell whether this would have been a winning trade or not. So we will still wait. Let's see how many times we would have won and how many. But let's count this one. So this one would have been a winning trade. So 1, and let's have had this one. We didn't have traded, so no trade. Okay, guys, so looking at losses, the recording, I just want to losses. Let me take off my camera so you can see me clearly. Make it red my camera, you see it clearly. You can see the chart clearly. To this one instead, let me make range.
So counting from here, we would have had 2 winning trades right now, and then we on again, and this is a new one. So counting from here, so win. Let's say anytime we win, let's say we are winning 200. Let's say our risk reward is 100 is to 200, right? With 100 is to 200 risk reward. So 100 is to 200 is our risk reward. So let's say anytime we win 200. Anytime we lose minus 100. But we've not lost so far. So we have 2 wins, which is another 200 in dollars, right? Let me just make this one current so you can see it well. Okay. So we have 2 wins now. Let's see. From today, let's come to the next day, the previous day. So let's count our initial balance. Okay, so we start 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is our initial balance. And where is the breakout? This is the breakout candle. So we take our short position. Stop loss 1 to 2. So somewhere a good place to be a stop loss, and take profit target as twice as our stop loss. So we would have also made another profit on this particular trade. So we go back to our chart and another profit. Have you seen? Very simple to trade. This is a very simple strategy. All you need to do is be very patient. The previous day, let's count our initial balance. Where is the initial balance? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. And this is our initial balance. Are we trading today? No, we wouldn't have traded today because the initial balance is too wide. If the initial balance is too wide, what happens? The market begins to range within the initial balance. So we are not trading. You see, we are not going to trade for today. So no trade. Now, previous day, let's count our initial balance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is our initial balance. And where is the breakout? That's the breakout. This is the breakout candle, right? So initial balance and breakout candle here. So we put our long position. So long on this breakout candle. Stop loss, good position. Take profit target as twice as our stop loss. So let's see, would it have been a winning trade? So let's see, take profit target twice. Stop loss, good position, take profit target as twice. So TP would have been somewhere here. Would it have been winning or losing trade? So let's see, drag it all the way here. Yes, it would have been a winning trade here. This way we would have been out as a win. So this also another win. Next day, previous day. So guys, see how simple this strategy can be. So previous day, initial balance, let's count initial balance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. This is our initial balance. This initial balance is average. It's not that wide. It's also not that narrow. So let's see where we would have taken our trade. We have taken a short position around this zone because this was a breakout candle. Can you see? So short position here. on the breakout candle. Stop loss behind a very good pattern, very good place. Take profit target as twice as our stop loss, which is 1 to 2. Are you watching here, guys? Watch here. 1 to 2 as twice as our stop loss. Would you have had a winning or losing trade? This one would have been a losing trade because this candle would have taken us out. Can you see? So on the charts, we go and record one loss is minus 100. This one too is in dollars, so minus $100. That's it. Now, so have you seen? It was almost hitting our take profit target, but we couldn't make it because this candle took us out. Why is it that the stop loss was not rather here? And so that we can take 1 to 2 risk reward here. You can't do that because this one, the stop loss too tight. See this candle. This is a very good, very huge bearish candle. So at least your stop loss should be behind the bearish candle. Okay, should be behind the bearish candle. That's why the take profit target was far. So this one couldn't hit our take profit target. So that's it. Let's go to the previous day. So previous day, let's count initial balance. Where is initial balance? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Initial balance here. Where is our entry? The breakout candle. Which candle broke the initial balance? That's it. That's our entry, this candle. So we wait for the market to pull back a little. We take the trade around this zone. So we go for a long position. Long position. Stop loss behind a very good pattern. Take profit target as twice as our stop loss. And would we have made profit or loss? Profit around this zone. Can you see? We would have made profit here. So this is also another winning trade. So it keeps going and you can keep going on, and this is actually a very simple strategy. Here, previous day, which was 28 April. Let's see initial balance. Let's count. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Initial balance. Where is the breakout for initial balance? This was the breakout candle. Can you see? This is the breakout candle from the initial balance. So what do? We take a short position from this candle. This candle is the one that broke out. So short position. Stop loss should be behind the pattern. Take profit target as twice as our stop loss. Would you have made profit? No, we would have made loss this day because this candle would have taken us out the other way around. And initial balance, sometimes when you get a losing trade, you can actually reverse your position. But I won't advise you do that. If you get a losing trade and the market break out of the other side of the initial balance, you can also take a position at the other side of the initial balance. But we are not doing that because you're a beginner. Don't do that. If it's a losing trade, take it as a losing trade and that's a move on. So this day would have been a losing trade. So here, loss minus 100. Have you seen? Good. But assuming you decide to take the other way around, when there's a losing trade and you decide to take the other side, then you would have also gotten a winning trade. But don't do that. It's for only experts who can do that. Okay? Don't know. If you're a beginner, don't try that. Okay. So previous day, let's see initial balance for previous day. Initial balance. So 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Initial balance a little wider. Oh, sorry. Look at the candlestick size and this initial balance. The initial balance looks wider, so we are not going to trade the initial balance for today. You see, the market was ranging, so no trading for today. Yes, previous day, initial balance. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12. Initial balance around this zone. Where is the breakout candle? That's the breakout candle. So you take a short position on that candle. Stop loss behind. Take profit target as twice as your stop loss. Would you have been winning or losing trade? It would have been a winning trade at this zone. Can you see? So winning trade, 200. So that's it. So as simple as it is, this strategy is very easy to trade and it has a very high win rate. So you see, if you are to sum up this, you realize that definitely you're going to make profit more than your losses, right? If you are to just sum up this thing here, let's go to auto sum. Where is auto sum? Okay, to sum up this, you're definitely going to make profit than losses, obviously. So this strategy is very easy to trade, and these are our losses. So let's auto sum our losses too. So we go to auto sum. These are our losses. If you take this from this and we go auto sum, then we are going to make profit. you see a profit of what, 1,000. So definitely this strategy is very profitable, as simple as that. So what you have to do is that you go to your chart and you practice, guys. Go to your chart and practice, okay?
So guys, you see, trading this initial balance concept is very, very simple, and it has a very high win rate if you're able to trade it well and understand the concept. Your ability to count the candlesticks and mark your initial balance and wait patiently for it to break out is where your success lies as a trader. So make sure that you go to the chart and you keep practicing and keep practicing and keep practicing. Also become good with it. You see, with this simple backtesting that we did, we got a very high win rate. But it's not always going to be like that, because definitely there's always going to be a drawdown in a strategy. But even the drawdown, even if you get about 50% strategy, 50% win rate, or even 45% win rate, with risk reward of 1 to 2, you are definitely going to become profitable. So you see, this strategy is very easy to trade, and it's a strategy that actually gave me confidence. It's a strategy that actually turned my trading career around. When I discovered it, I used so many years to master this strategy and to create this concept. But you, as a YouTuber watching me, you are watching me from YouTube, you use about just 15 minutes to learn about this concept. It's up to you to also go to the chat and practice and become a master of this particular concept before you can become profitable with it. Okay, so go to your chat and do it. Backtest and understand the concept of initial balance. If you want more details on initial balance, just do some Google research, type initial balance, and get more concept about it. Or in simple terms, just go to your chart, your MT5 chart, your USD chart, and just backtest. Go through the same as simple as I've done, and you see that your trading career will start to have a very good turnaround. And don't forget, strategy alone cannot make you become profitable, but your emotions as a trader to wait for your strategy to hit, for your take profit target to hit, is what's actually going to contribute to your success as a trader. Okay, so I think that will be all for this video. And if you enjoyed the video so far, don't forget to hit a like button and don't forget to subscribe to the channel. If you're also interested in learning how to trade, you want to take trading a serious game, guys, then you're always welcome to just send me a message. Hi, Mr. Seth, I just want to join your weekend training program. You can join a weekend training program, or you can join my live Zoom lessons. So it's up to you, or go to your chat and start practicing on to become good with this. Okay, so until then, take care of yourself and see you next time. Bye.